Okay, I'm going to shift gears and talk about one stock which also has seen rather, a nasty ride, at least off late in last 2 or 3 weeks. That's Justdial.
In fact, Crompton is almost like a flashback of what transpired with Justdial post the numbers.
Yeah, so the management is here and I want to use this opportunity to connect with the management so that the management can clear the air on what market perception of Justdial is. Mr. Mani, good morning and thank you for joining us. I hope you'll take my questions in the right spirit, but markets are really worried about the disruption which is going on in the IT world and with regards to Justdial.
Good morning, Neeraj. I will definitely take it on the right spirit. Go on, shoot. So, shall I explain the last quarter to you, or you want to ask me questions?
First question to you is a very simple question. Are you aware of any large shareholders who've exited your company? What is going on with the stock price? Is this selling or dumping by some large institutional investors?
So first of all, our large institutional investors have faith and trust on us. Not a single large investor has sold a single stock in this in this last four days of trading session. And if you look at the delivery volumes, they are in early teens. So that clearly explains there is a different kind of a set of people who are playing around with this stock. And to explain the last quarter, we actually have not done bad at all if you look at it in with the right data. In the last 2.5 years, we have not increased our sales force. Even it has been flat for the last 2.5 years. And that was a mistake that we did, but in other way, it is a strength also. I'll come to that. Despite that, this company grew at high 20s, and then it came down to the 16 last quarter, and 11% this quarter. Which goes to explain that despite not growing your sales force, when you're targeting 20 million Indian businesses, and you have spread your platforms into different game altogether, and you're not spent extra on the sales force, despite that if you have grown, that means a good sign is the existing customers are benefiting immensely and they are fueling the growth. As well as the existing sales team has produced tremendously, which inspires us now to, we were waiting for 2 milestone products to expand our sales force. In a way, I take the blame as the CEO of the company because I was one who kept postponing it because I said these two are two different diverge new products and we need a sales team which gets crack on from day one, gets trained into the new products. So hence I kept delaying the sales recruitment and that's where we got hit badly. But as a company, we are much stronger than ever before. We are far more confident than ever before. Now I want to explain you on the internet space. There are 2 ways to play this internet game. Now either you look at a high growth, negative gross margin, which is what you hear almost everyday basis on the front pages of newspaper of companies that are high growth but negative margin. Or like Justdial, you play a high growth, high margin business, which means for 20 years we have been in existence, we have been disruptors, we have been disrupting our own model, and we have continuously grown. Every investor who came early has made multiple baggers. Some of them even made 20 baggers. The businesses cannot be run by throwing money. That's our philosophy.
No, absolutely not, Mr. Mani. And we're clearly not debating that. But our only point is, your stock has corrected 30% in 2016, which is just a month, 63% in last 1 year. You're almost close to your retreating price of 590, 548 on last check right now. What explains this kind of selling? You're saying the FIIs who are invested in your stock are still sticking by you. So who sold into it then?
In fact, most of our VC investors, except for Tiger, who sold out long time back, and they had actually, because of their fund, had come to an end, so they had to sell. All other investors are still stayed put. Not just that, we got large, high-quality investors. Other than this, players like Fidelity, Nalanda, and all kinds of players. See, the point is, it's also the maturity of the investor. An investor who understands this space, who watches the company much closer than the person who is looking at daily newspaper headlines. The person who looks at newspaper headlines will not understand this space. According to me, great product only build great businesses. And then the product should really solve a real problem of this thing. We have been surviving all these years. What has been our revenue source? Our revenue source has been by enabling and empowering other businesses. And today, the needs of these businesses have changed so dramatically thanks to the changing ecosystem and the changing competitive landscape.
I understand that, sir. I completely understand that, Mr. Mani, that technology evolves and you have adapted to technology adoption in the past. So let me just get some basic tough questions out of the way. And these are concerns which I've got from some of your shareholders and some of your long-term shareholders when I spoke to them off the record. One concern was that your search business has contracted for 5 quarters in a row now. Instead of growing at 30%, it is growing at 11% right now. The paid listings have also plunged for second quarter in a row now. Now, these are two numbers which analysts track, and they need some explanation there.
There has not been a single degrowth, and you yourself contradicted by saying contraction and then you're saying grown by 11%. So this is a lack of wisdom and maturity among the analysts who are looking at the stock. Secondly, I tell you, a lot of people make noises like, oh, there is a vertical players in the market, hence Justdial got affected. Do they have any knowledge? Justdial makes only 7% of revenues from accumulation of restaurants, doctors, entertainment, and the works. Only 7% of top line. And there are immature analysts who would say, oh, we got affected by this. Moreover, in all these three segments, we have made more money than ever before. So this is like, you cannot read newspapers and hearsay and write analyst reports. You need to come and meet the management. We've got one of the world-class products coming up right now, which will change dramatically the way Indian businesses do. There's something called JD Omni. That's a single platform, because in these 2 years, we learned a lot from the market. We spoke to our, people who are listed with us. Their concerns are they're worried about giant online players disrupting their business. They are worried about their customers moving online. How do they face these challenges? And they're also wanting to have efficient systems so that the cost efficiency is such that they're able to make a reasonable margin even at selling at a cheaper price. Hence, we build this great product called JD Omni. 25th of February, I invite you. We have a conference at Trident. We're inviting all the press and media, everybody. You must come and see the product. That product creates a website for a small business on the fly. In 10, 15 minutes, you create your own website, your own app. Not just that, you have a complete payment gateway integrated website of your own, which has a one-tap payment on your mobile app. World class. One-tap mobile payment. Like what Apple Pay has. It's something like that. So if you are a grocer, if you are a medical store, I'm just giving you the weakest example, you can tell your customers, madam, you can just place the order online now through my app, one tap. Even fruit vendors will use this app. Forget about big businesses using it, multiple channel outlets using it. And that is it. Not just that, we are also allowing them to publish their inventory on marketplaces which will survive. Let's say, hopefully they survive.
Okay.
Those marketplaces, they can even publish. Not just that, even their existing POS system gets replaced by the new system of Justdial. The complete integration of your online and offline. This is what you need to understand.
Right. Mr. Mani, that's great. This new launch that you're talking about, kudos really for, going back on the drawing board and rethinking your strategy. It sounds like a great product. We're yet to test it. But what about the core business? And, I get back to the point that you were exactly making as to how not just, peers in your entire group are getting threatened by the existence of players like Google. At the tap of my hand phone, when I have Google Maps directing me to a restaurant or a marketplace, etc. Why would I want to call Justdial, get down the number, and go through that process? It's a change in a business model. It's a change in the way people are now searching for avenues and venues, etc. now.
Sorry.
And Search Plus was a delayed product launch in any case.
Okay, launch of Search Plus is delayed. Search Plus was not delayed. And moreover, to correct you, 80% of our users, close to 80% of users use our internet product, not the voice call. So you need to know the changes. Secondly, you need to understand as a user evolves, he shifts away from generic search. He prefers places where it is like customized. He has transaction capability, which has an ability to memorize his previous transaction. What JD has built today, you will see on 25th of February. It is a world-class product, both in terms of the consumer app and the Omni app for the businesses. It takes a while to build great products. You cannot just throw it, you cannot just come with this by a magic wand. And it took us 2 years to build it, but I can proudly say the product that you will see as a consumer, you would say, I don't need a food app. I do not need another app for travel booking. I don't need an app for a doctor's appointment or anything to do with that. You will see that on that 25th of February, that is how we change the world. And that is how we've survived for 20 years, and we are still as profitable. By the way, JD makes more profit than all the online players put together, but for one.
Okay.
And in fact, even putting that player onto we are making more money than them.
Mr. Mani,
the maturity of the market, because we are not one of those companies which try to come with a PR agency on the front pages of newspapers.
Mr. Mani, I'm glad we are clearing the air. I'm just trying to, get a message across to your shareholders. So I'm going to talk about some numbers right now. Since we know that, you are sitting on a reasonable amount of cash on your balance sheet. You've announced a buyback. The stock has fallen aggressively now. Would you be looking at reworking your buyback price?
I think legally it's not possible. We got all the approvals, so we cannot track back on that decision. But that's again a money given to all the shareholders. It is a sensible way of giving money to shareholders. I mean, one could look at it as in a more, we are close to 1,000 crores of cash. So we are worried, like we don't want to do some kind of a mistake with kind of cash that is around, that tomorrow you go into doing some stupid acquisition and remember and regret it later. That way we have wisdom, of course. For all these years we have kept it. And so that's what you need to understand, the merit of this company more than anything else. I think this is a company that stands out in the crowd. But the problem with media today is you write glory about somebody and then you write the obituary of the same person in the same 12-month period, which you don't kind of highlight.
Mr. Mani, we are just dictated by the stock prices, I mean, it's not a figment of our imagination with due correctness. Your stock is down 8.25%. It's 541. It's now nearing its issue price of 530. So, I mean, we're just reiterating what the stock market is telling us.
This is truly a great opportunity for investors who missed out during the IPO time. That's the beauty about it. That's the beauty about markets. Markets give you opportunity to enter at the right time.
Of course. Yeah. So this is what we're trying to do, Mr. Mani, get your message across to your shareholders so that they should not panic. So I'm going to get a closing comment from you. Since we are talking about numbers, since we are talking about, there is nothing wrong with the business model. It is business as usual for Justdial, and one should not get worried about the market and the stock performance. Can you give me a broad number for FY17?
We'll be back on our growth track.
Okay, and how do you define that?
You have to go back to the history and check.
Okay, so you are assuring to our viewers and to your shareholders that your commitment will not change. The numbers what you've reported historically, those numbers will not change, and there is nothing you can do about the stock price fall, but your messaging is that it is business as usual.
Absolutely, even better. Even better.
Okay.
You need to understand the growing top line, and on top of it, I'm saying the growth will come back to the same. So it is a phenomenal growth in absolute numbers.
When you say get back to the same growth numbers, are you talking about 25 to 30 plus growth levels? Is that the run rate that you have in mind?
I would say between 20 and 25%.
Okay, I was looking for that.
How soon? In about a year's time?
We don't guide, but the point is here, since there is a bit of a kind of a panic reaction, some advisors said like it's better to tell the market what the reality is rather than
Absolutely.
So that's the idea.
So in a year's time, you're saying you will get back to 20 to 25% growth levels.
Between 20 and 25%.
And this new product that you're talking about, JD, which launches on the 25th of this month, how much money have you put in to actually build this product?
That's another beauty. That is a lovely question to ask. The money, if you look at our EBITDA growth, if our EBITDA is negative ex-ESOP, about 15%. Year on year, okay. But if you look at the amount of money that we have invested, almost every quarter we are spending 15 to 20 crores on our new products. So this is the beauty about this company is we don't capitalize anything. We write off every expense. So this is where you have to see that the money that we have spent over the last probably 6 quarters, the result of which we are going to see now, which is what is going to be. Anyway, we are going to be happy because we are not worried about stock prices, honestly. We are, of course, we empathize with our shareholders who are short-term, thinkers, but the long-term thinkers, they know clearly what this company is made of. So we do not really worry about the stock prices at all. I personally don't even look at the stock prices.
No, Mr. Mani, that your comments are helping the stock, because in seconds the stock has recovered more than 2%. So I'm glad that you've shared that growth outlook and you've clarified and cemented the concern that business is business as usual. I have a final question for you, and then we'll not extend our appointment with you. A very basic concern, and this is just my understanding, is that if you have cash on your balance sheet, your return ratios will get damaged because that cash will not give you a lot of return. So what is the plan in place for that?
You can see. So that will reduce it a bit. I think at about 150, 170 crores will reduce.
I'm sorry, I missed that last part.
So the buyback, there will be some money used, about 150 or 170 crores.
Okay.
Yeah, so that will reduce the cash thing. See, the issue is also in this kind of industry, you need to have a war chest. You cannot ignore that. Huh? You do not allow somebody to come and potentially disrupt. Obviously, see, you really good product, you need to have to disrupt somebody. But still, you need to have the war chest. I think that's common across all internet companies.
Okay, so Mr. Mani, now that you've put really everything on paper and everything is clear to the shareholders right now, just one rhetoric question. What could go wrong with this launch of JD Omni that you're talking about? What is that one thing that still worries you about your business? What could go wrong for you, say, in the next 1 year to 2 years from now?
Very good question. We did a sample of JD Omni with about 100 odd customers, 200 odd customers actually, between different cities, between Mumbai, Ahmedabad and Pune. The response was phenomenal. The response from SMBs was, oh, you guys really got what we want. That's truly enabling, empowering. So I don't think there is too many things that can go wrong, because also one more point I want to highlight here is we are not trying to customize the product. It's like a product ready-made. You go, it's like opening an email account. As if you're opening an email account, that's it, you're done. And then you kind of maintain it as per your inventory status and as per your little bit of customization to your own business, which is in your hand. And that's why this product is so appreciated by people. One-click payment to all your vendors. Imagine if you want to order a purchase order, you want to create for 10 different distributors. In one click, you can create purchase order for 10 distributors for 100 products. Imagine the kind of power that it has, that in real time it publishes online your inventory status.
Mr. Mani, you're deviating from my question. My question was, what could go wrong for you in the next 1 year? What is that one worrying or niggling factor for you?
I am not really worried about anything going wrong here, because we have really tested it so hard and so many months of putting in post the production. I'm not really worried about things going wrong. I think the only thing that we could worry about is probably the not having the salespeople on board, which is not the case, looks like right now. There is a huge recruitment process which is in progress, and we're pretty confident that we'll do a good job at that.
Okay, I'm so glad that you really came out in the open and clarified. I wish you'd done this earlier. The stock already recovering a wee bit from the lows of the day. Remember, it sunk all the way to its listing price. So a bit of a recovery coming in from there. Early days yet. Let's see where it settles. It's still under pressure, a good 6.25%. But Mr. Mani, great chatting with you. Thanks for taking the time out.
Thank you.
Aisha, typically what happens is when some of these niche companies, they go public, they get a niche premium. Markets believe that the historical growth rate, which comes at a different base, would be the new normal for future. The stock goes at a wild P multiple. That's markets for you. When the base effect or a little bit of disruption kicks in, markets, they tend to hammer the stock down. And then markets, they realize that, look, the company is not as great as what they thought, but it is not as bad as the way markets currently are dealing with. So my sense is the stock will stabilize once good numbers, they start coming out. The hopes were so high. Then when hopes are challenged slightly also, you just get a flat landing, so to speak. And that's what happened to India as well. I mean, in May 2014, hopes were so high that little bit of disappointment has led to some degree of derating. And that has also collided with global risk. So right now there is a global risk. Global internet stocks are coming down. The pedestal opinion for the stock and the business growth has changed. Now the management has come out and clarified they'll have to come out with good numbers, 1 or 2 good quarter numbers, and maybe the stock will find its right level.
Yeah, but it's a little premature. I also think that it's a bit of a sort of panic comeback from the management. The launch of a new product which is completely diverse from what they've already been offering to the market. Yeah. Something like a JD Omni, which he's, for the first time on any television channel, he's spoken about this new product launch from the stable of Justdial. We're yet to see what this product is about, but the management has for the first time gone on record exclusively on ET Now and talked about this new product launch that is going to take place on the 25th of February. He's pretty confident that he's going to get back to the growth levels of 20 to 25%. But let's see how this new product really gets absorbed by the market. I mean, what, there are 35 apps on your phone and 20 on mine, perhaps? Let's see if this makes the 21st and 36th on yours.
Markets will only give a real verdict once they're confident that Search Plus has picked up and this new product launch stabilizes. So it's like 2-3 quarters away. I think the stock will find its right level. I mean, stock's down by 50-60%. So it'll find its real level. Maybe long-only institutional investors will come back. But the reason why it's been a boom and a bust story is that it was a niche premium. It went to some 1800. P multiples were north of 35. Everyone thought this is India's Google. And then realization kicked in that this is not India's Google. Growth numbers were slightly challenged. Maybe one missed quarter. Market conditions were bad. And then the stock fell.
Well, there's only one alphabet up until now. But what about commodities? Let's see where they are headed. And clearly, Manisha, shaking the global equities as well. What's the take on crude? Where is it going from here?
On the weaker side.